Hello everybody, Carlos here from Forward Side Effects, and let's get right into the forecast review, October 9th, 2013. Everybody knows today the President Obama announced actually one of his most um, important economic decision, and he nominated Janet L. Yellen to lead the Federal Reserve. And this is pretty hard because you already know how they closed the federal government, and that's the reason all the chaotic situation has been going on in the market. So it's extremely difficult to be trading at the markets in terms of expectancy. I mean, with a more important uh, point of view, it's you're probably going to understand why I will not like to be trading on the U.S. markets. I mean, all this news going around, it's just definitely going to push the market all over the place, not giving us a clear path or a clear understanding where the price action should go. I'm talking about on those news announcements. But even though all those news reports comes out, we don't want to be trading while those happens. That's pretty much 8 o'clock, between 8 o'clock and 10 o'clock a.m. Eastern Standard Time. So a little bit of a secret for you is to understand that if you want to participate into the markets, in the currency market specifically, you want to be trading after 10 a.m. when most of those reports has been gone out already, and the market at 9:30 will assimilate the situation. So pretty much anywhere from 10 to 10:30, the market has already assimilated the reports, the news, and the reaction of those reports as well, giving you a more clear path or understanding where the price action should go. Okay, so that's actually how I trade the E-mini S&Ps. Specifically, I trade after 10 a.m. because I don't want to be involved on all this chaotic situation. Yes, I'll probably miss a lot of opportunity, but I'm not looking to find all the opportunities. I'm looking to find the opportunity to make at least $200 to $400 a day, which is our objective trading the futures market in this case. So, in translation into the currency market, could be looking to make anywhere from 10 to 20 points on a daily basis, which I know a lot of colleagues on a daily basis they go for 20 points a day, but they trade heavily into the market, meaning they go usually from anywhere from 10 all the way to 40, 45 full contracts, but they just scalp the market for 20 points and they're done on the day. So today you need to start applying that analogy into your trading, saying, okay, which is my objective? I would like to make 20 to 30 points a day, and I'm done. Once that it's reached, if the market gives more than that, so be it. Don't get greedy. Here's where the psychology of trading comes in. You gotta stick to your plan, and if you do, I mean, you can do the math. I mean, doing 20 to 40 pips every single day on average. There are other days we don't trade. There are other days that we're gonna get stopped out. But if you do that on average, that's a pretty much nice return of your investment, maintaining a control, balance, and educated guess on your trading plan, following your strategy strictly, and don't deviating from it. Okay, so that's basically what I want to start off with the video today. So the market just finally on the bridge pound had a sell setup. Now, I just left the original synergy zone just to give you a heads up of understanding the power of what what we have here. I know that we did not trade it, but we never knew. Once again, we never knew that this after 2 days is what's going to happen. Just for the fact that the reason we stood out of the market, which I didn't told you, I should have been more clear about that. It was because of the fact that the Obama president was coming in to talk today, and the market was completely chaotic about that. But if we analyze the price action, even on this, volatile reaction of the market, even on the chaotic situation, take a look how the Zenith zone held as they were supposed to. You see, as resistance point, and the market just stood there and look how the price that we left behind already from 2 days ago. This is actually for 2 days ago. They finally reached. So the point that I want to make here is to for you to understand that the synergy zone is one of the most powerful identification areas or reversal areas that we can have on our side. And if we manage correctly our accounts, we can pretty much understand where the market should reverse from and go to. Now, on the other hand, I want to explain to you something else. Usually, these levels that you see in this area could translate like an inverted synergy zone. I could go something like that, and you see it will translate into the more likely the same idea. It is a different technique that we use to reach those levels. We use a lot of Fibonacci and Elliott's, but we filter those. We got like 6, and then from the 6 we usually try to go for 3. And the way that we choose those 3 is when I receive the numbers of my big time players, mentors, of understanding where their supports are located at, and I choose the closest one to each other. And this is how you see me coming up with these numbers with such an amazing precision where the market should go and not go. Okay, so I'm just trying to clarify that it's just a matter of time for you to get acquainted with it, feel comfortable, and understand the flow of how we roll on the 4 set effects. Now in this case, this sell setup went out nicely, so we go to the 4-hour chart. The market widened up and it's back again pointing downwards. So based on once again, check the video below. I forgot about that. Price action can dictate here a wave 1, 2, and 3, and I explained this on the video below. So we wasn't sure. We just needed to wait for the prices to hit another level down. Now, if we do like a pivot step like you see in here, you already might have guessed that the potential of the width of this triangle could be all this 240 points from the breakage. So if that's the case, 240 could translate pretty much all the way down here. And those are the levels that we have right now for us to use. And this is a new synergy zone on a pullback to see if we can just participate on the last wave down. So a pullback between 1640 and 6115. Targeting 58.72, 58.05, and 57.65. That's going to be our targets in this case. And once again, if we take the width of the triangle, could be like the top in here, over here, 247, round it up to 240. And 240 will put me, long and behold, between these two guys. And you notice these two guys are closer to each other, meaning that the zone got very narrowed between these two levels, which has a highest probability of being reached because we use it as like multiple confirmations. All right, so that's what we got on the bridge bound. Euro dollar behaved pretty much the same thing. You see it here, a nice downward move, crosses the moving averages on the 4-hour chart. Let's see the MACD. I separated pointing downwards. It's extremely oversold, but hey, price action is king here. So we're looking for a pullback between 35, 35, 36, 67. And we're going to be targeting 34.75, 34.56, and 34.32. All right. Next is going to be Australian dollar. Let's see what you can see in this market. Can you see something happening here? Absolutely nothing, right? Let me go to the 1-hour chart, take a look at that. Sideways. All right, so should we do something or try to force a trade here? No, all right? Let's just forget about it. Not even going to waste our time in there. Now, this guy's finally broke towards the upper side. Took quite a while, but they did. They broke this pivot that I have here. It was from this high all the way down here. That would be the entry. And if I use the bottom part of it, I have my triangle. And I can use a lower pivot here, and this one counts because this low took the prior low, so I can use kind of it would be probably something more like this. Okay. So basically, excuse me about that. We got about 92 points towards the upper side, and 92 points put me pretty much to the third target that I have right here. Let me eliminate this, guys. We don't need those. So when we drop to the 1 hour chart, I have a pullback tendency for 97.11, 96.90, and we're going to be targeting the 97.72, 87, and finally 98.14. All right. So for our chart, we go and check the MACD coming off 20. Pretty much, you see how this goes in sync now. Warning, 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 but finally price action broke towards the upper side. I'm talking price action of the swings. Then we use the pivot steps for confirmation of entry. We take the width of the triangle that we have in here, 90 plus. From the breakage, that's going to be the possible target, and we confirm those with the numbers that we received. And if you notice here, I received the numbers of 97.72 to 87. These are closer to each other, but hey, those are the numbers that we have. It looks like this is a very highly problematic area. If we go back in time, yeah, it worked out as a resistance there. It worked out as a support there and support in here. So yeah, it coincides with those levels and those numbers, so we can assure that we're going to have some problem when the market goes there. But the overall major tendency would be to the 98.14. So we're going to be buying on a pullback once again, 97.11, 96.90, 96.90, and we're going to be targeting 97.72, 87, and 98.14. All right, so stay tuned, as in the next upcoming videos, I think it's going to be within the next couple of 2 videos, I'm going to bring an amazing training that I have not taught before, and I'm going to open up. And because I received so many questions about how can I, Carlos, how can I choose a market to concentrate and become expert in it and understand where to start analyzing it, and because I don't know where to start from, the whole sessions. I don't know which session to start trading at. I don't know which is the session that provides the most. I don't know any of that, so I'm confused. But I know the system. I know how to trade. I got my parameters. I got the whole thing. I love the the synergy zones and everything. But if there's a way that I can start off choosing a market by myself, sit down and become an expert of it, sure, there is a secret way to do it. And I say secret because for I don't know how many times I probably been taught this from my mentors, and I plain and simple, it was so simple that I kind of didn't pay too much attention to it. So I think that's the same reason and the same situation is being happening to everybody. So within the next couple of days, we're going to be planning either doing a webinar, or probably I'll shoot out a separate video and provide you with access to it. It's going to be a very instrumental training for you to become very extremely good at how to control and become an expert in the whatever market you decide to trade it with. We're going to be choosing either one of the 4 pairs that we are accustomed to be trading here, and I'm pretty much I'm pretty sure you're gonna love it. As a matter of fact, this is one of the modules of my mentoring program, so I'm gonna just lay it out and help you out understanding and give you the heads up of how to become an expert from the get-go on the market. Now, this is a professional way of learning the market. This is not a cheap ebook that you're gonna get out there. This is the real stuff, no BS. And I guarantee that here's my guarantee. Once you see that video, if it is not worth your time, I mean, like, or your information, you can just send me an email, and I'll give you a one-on-one consulting with you if it is not worth your time. This is how secure and sure I am when you understand and see that simple video that I'm going to provide for you and training, you're going to be blown away. This is Carlos Diaz from Forest Facts, and I'll see you in the next forecast.